Hello everyone, you're watching Saheb Academy, and if you're here to get your topic simplified, then believe me, you are in right place. So let's start the video and let's get on with it. Hi everyone, welcome back to Saheb Academy. Today in this 7th video of rectification chapter, we are going to understand what is the concept of this correction in the next accounting period, and then we are also going to solve a problem on this. Is that okay? Yes. But before watching this video, please make sure you have watched the previous videos, because all the tricks and techniques that we have seen in the previous 6 videos, everything will be applied over here. Okay, if you haven't watched the previous videos, then believe me, this video is not for you. Okay, so let's start the video. Let's understand this correction in the next accounting period. Now first, let's take an example to understand this. See here, let's say in the current year of 2022 we identified an error. Okay, an error was detected, but then we came to know that this error did not actually happen in 2022. It happened in the previous accounting period, that is 2021. But it was not identified nor rectified over here, so it was carried forward to the next accounting period, that is 2022. So in the next accounting period, we identify it and then we have to rectify it. Is that clear? That's the situation we have over here. And this situation comes under this topic, correction in the next accounting period. It was not rectified over here. In the next accounting period, you have to rectify it. Correction in the next accounting period. Is that clear? Easy, simple. You got that. Now, how are we going to rectify this? Yeah, this type of errors. That's the main question, isn't it? See, it's really simple. Everything will be same like what we have seen in the previous video. All the same techniques, tricks, and everything same. Just small exception is there. That's what you have to properly understand, and also the logic behind it. Okay, and in the first video only I have discussed a bit about this topic. See here, I told you that there are 3 different stages of detection of errors. Okay, and our approach to their rectification will be based upon that. I told you in the exam, questions also come based upon this. Yeah, first category, second category, third category. You can say stage 1, stage 2, stage 3, or stage A, stage B, stage C, whatever you want. Okay, so this is before the trial balance, after the trial balance, and next accounting period. Now in this video, in this 7th video of rectification, we are discussing this correction in the next accounting period. What did I tell you over here? I told you to rectify these type of errors, what you have to do, you have to follow the same thing what you do in the second stage. Two-sided error, journal entry, record something, reverse something. One-sided error, that means what? One-sided error means you have to make use of suspense account. Okay, mistake is there only in one account. One-sided error means mistake is there only in one account, so you will only rectify that account, either debit or credit it depending upon the error, and then the journal entry will be handicap, so you will complete the handicap with the suspense account. Yeah, this type of approach you have to follow. Now of course, we don't actually do it this way. I mean, we have lots of different techniques. You have seen the previous videos, right? Homo, hetero, recording the wrong amount, casting errors. Yeah, lots of different techniques are there, and then we have made a separate category for that: posted, debited, credited. Yeah, so you have to watch the previous videos if you don't know about our techniques and tricks. Fine. So the same thing you will be following over here. Okay, nothing different, same thing you'll be following. See here, stage 2, same like stage 2, but with small exception. Same thing. The exception is what? Let's understand the exception now. Now see, the exception is, while passing the rectification journal entries, what you have to keep in your mind is that you cannot debit or credit expense or income accounts. You cannot do that. Instead, what you will do is you will replace the name of expense or income accounts with profit and loss adjustment account. Okay, you will open this new dummy account called as profit and loss adjustment account, and all the rectification of these accounts, expense and income accounts, will be routed through this. Okay, whenever if you want to debit or credit expense or income account, what you will do, you will debit or credit profit and loss adjustment account. See here, so every error in any expense or income account will be rectified through P&L adjustment account. Just replace the name of expense or income with P&L adjustment account in journal entries. For example, I will give you a simple example. Let's say purchase book is undercasted. So what is the rectification entry? You all know. We have to increase the purchase account, just debit the purchase account debit to suspense account. Yeah, that's a rectification. But now in this case, yeah, which case? In this third stage here, next accounting period, what you have to do? You have to follow that exception. What you will do? You will not debit the purchase account, you will debit profit and loss adjustment account to suspense account. Profit and loss adjustment account debit to suspense account. Is that clear? This way you have to follow the exception. Now you will wonder, what is the logic behind this? Okay, we understood. We will not debit or credit expense or income accounts. Fine. We will just use this account, profit and loss adjustment account. Fine, we get that. But now what is the logic behind this? Why are we doing it this way? See, it's really simple. When did the error happen? Error happened in 2021. Yeah, and you are rectifying it over here. Is that clear? Yes. Now what happens of expenses and incomes? Tell me. Expenses and incomes are what? These are nominal accounts. Now if you don't know what are nominal accounts, leave that. Expense or income account, what happened with them? They go to profit and loss account. Yeah, they are not carried forwarded to the next accounting period. No, they aren't. You know what happens? We just take the revenues, incomes, and then we take the expenses that have been incurred to earn that income. Yeah, we match them and we calculate profit or loss, right? And that profit or loss is added with the capital or deducted, yeah, isn't it? And that figure is carried forwarded to 2022 in the next accounting period. Yeah, profit will affect the capital and the capital will carry it forward to 2022, isn't it? That's what will happen. Yes, but that's not the case with the asset, liabilities and capital. Asset, liabilities and capital are not like expense or incomes. They are always carried forwarded to the next accounting period, because what will happen to them? They will go to balance sheet and then they will continue the same kind of balance they will have in the next accounting period. But that's not the case with the expenses and incomes. If you pay rent for this year, let's say this year you have paid rent, then again in the next accounting period you have to pay the rent, isn't it? So expense or incomes are meant for only short term. Is that clear? So that's the thing. See here, what will happen is, because expense and income accounts are closed every year through profit and loss account. Yeah, I told you what happens. They go to profit and loss account and you calculate profit or loss. Okay, so expense and income accounts are completely closed every year at the end. Fine. They are not carried forwarded to the next year like assets, liabilities and capital. That is why we have this exception. Yeah, error which happened in 2021 in which type of accounts? In expense or income accounts. Yeah, if these sort of error happens, then you cannot debit or credit them. Yeah, in this 2022 you cannot, because they don't exist in 2022. They don't exist. They have been extinguished. They have been closed in the previous year itself through profit and loss account. Is that clear? So what we have to do, we have to make use of this profit and loss adjustment account. See here, in next year you have new expense and income accounts. In 2022 you will have rent account with zero balance. Yeah, it will start with zero balance. It's not like an asset or liability account. If you had a furniture account, let's say here of 50,000 after charging the depreciation at the end, let's say, then in the next accounting period also furniture account will be there of 50,000 only. But that's not the case with the income and expenses account. Salary account will be completely finished over here and new salary account will be there over here. Clear? Easy. So in next you have new expense and income accounts. So to rectify the past errors, yeah, prior period errors, if you debit or credit expense or income account, then these are of the current year, Yeah, you will have new, expense or income accounts over here. So the new accounts are being debited or credited and you are not rectifying anything. If you do that, what will happen is they will hit the current year profit and loss account and it will mess up your current year net profit or loss, okay, giving you a wrong profit or loss because those errors happened in the previous accounting period. Is that clear? So that is why you have to make use of this profit and loss adjustment account. Okay, that's the logic behind this. Now let's understand what will happen to this profit and loss adjustment account. Right now there's also one more term that you have to understand before discussing profit and loss adjustment, that is prior period items. You will see this in the study material. Prior period items, what does that mean? See, it's really simple. These are incomes or expenses which arise in the current period as a result of errors or omissions in the preparation of the financial statements of one or more prior periods. Okay, because of some errors in 2021 in the previous accounting period, what will happen? Because of some errors, some income or expenses will arise over here because of rectification. Yeah, because of rectification of those errors in the current period, some income or expenses will arise over here in 2022, and these items are called as what? These items are called as prior period items. Is that clear? Prior period items, and that is what we take in the profit and loss adjustment account. Now don't think that it's different. What we have discussed now over here, what we have discussed, these expense or income accounts, these are what? These are prior period items only. Okay, you're rectifying them. So because of that, what will happen? They will come into the picture in the current year, but actually they relate to what? They relate to previous year. Is that clear? Yes. So now what happened to that? It's just a term actually. It's just a term. Don't worry about that. So what happens to these? They just go to profit and loss adjustment account. As I said, it's the same thing. Yeah, it's the same thing. We are not taking expense or income account while rectifying these errors. Yeah, whenever we have errors in expense or income. So what we use? We use profit and loss adjustment account. So they are going into where? They are going into this account, profit and loss adjustment account. Okay, is that clear? You will practically see this. Don't worry. Okay, profit and loss adjustment account. Fine. And then what will happen? What will profit and loss adjustment account give us? What is the objective of this? Of course, you all know that we are using this account to rectify the errors in income or expenses. Yes? Yeah, which happened in the previous accounting period. That's why we are using this profit and loss adjustment. You know that. Till that you know. But now what is the objective? Yeah, what is the end result of this profit and loss adjustment account? What it will give us? Yeah, see, what does P&L adjustment account will give us? It will give us the net profit or loss because of prior period items. Yeah, these items have come into the picture. So because of these things, what will happen? Of course there will be a profit or loss. Now these are income and expenses, isn't it? So of course there will be net profit or loss, and that is what we get in profit and loss adjustment account. Clear? Easy. You understood this? Yeah. Now what will happen to this balance? Yeah, profit or loss, what will happen to that? It's simple. See here, we transfer the P&L adjustment account balance to profit and loss account. Okay, the main profit and loss account. It is shown after the net profit of the current year in profit and loss account. Is that clear? After the net profit, you will take this profit and loss adjustment account balance. Is that clear? So you have to charge the prior period items after deriving the net profit of the current year. Clear? Easy. And then what will happen? Who has right on the profit? Who has the right on the profit? As I said, in P&L adjustment account also, you are getting the profit or loss, and in the main profit and loss account also, you are getting what? Current year net profit or loss. Yeah, both the same things. Yeah. So who has the right on these? Of course, it is the owner, isn't it? So that is why both of these things, they go to where? They go to capital account. Yeah, they go to capital account. So this will be the process. See here, profit and loss adjustment account. The balance will come, and that balance will go to profit and loss account. And then in profit and loss account, what will happen? There will be current year profit and loss. Yeah, current year profit or loss. And then this prior period profit or loss, both of these will go to capital account. Fine. But now in the exam, in the question of rectification of errors, what you have to do, you have to directly take the profit and loss adjustment account balance to the capital account. You will not, take it to profit and loss and then take it to capital. No, you will not do that. What you will do, you will see in the study material also, directly you have to take it. Balance of P&L adjustment account will directly go to capital account. Fine. So don't worry, we'll now take a practical question. Okay, we'll take a question and we'll see practically how this will happen. Fine. Don't worry, it's really simple, it's not difficult. Okay, so you understood now. Prior period items, income or expenses which arise in the current period, but it actually of the previous period. Yeah, because it comes into the picture because of errors or omission in the previous periods. Where do they go? They go into P&L adjustment account. I mean, we use P&L adjustment to rectify them in the current accounting period. And then here in P&L adjustment, what we will get? We will get net profit or net loss, and that balance will be taken to the main profit and loss account. So in main profit and loss account, two things will be there: the current year net profit or loss, and then after that we'll have this P&L adjustment balance. So both of these, who has rights on them? The owner. So owner will take them, it will go to the capital account. Okay, is that clear? So this is the entire logic. But for the question purpose, for the exam purpose, what you have to do, directly take the P&L adjustment account balance to the capital account. And then of course, in these problems you will also have suspense account. I mean, you will have suspense account everywhere, not only here. Yeah, you will have to open suspense T account and also the P&L adjustment also. So P&L adjustment balance will go to capital account. Always it's like that. P&L adjustment account balance will go to capital account. But suspense account normally it will not go to capital account unless otherwise a specific thing happens, which we are going to see in the next problem. Okay, so let's go to a problem of this. Now here we have illustration 8 of the ICAI study material. Let's understand how to solve this. The first thing you need to know is how to read the question. First read the top part, the first para you can say, and the last requirement. By reading this much, you will be able to understand what kind of question is this and what approach you have to use to solve this question. Okay, so let's do this. See here, Mr. Roy was unable to agree the trial balance last year and wrote off the difference to the profit and loss account of that year. Next year, he appointed a chartered accountant who examined the old books and found the following mistakes. And then at the end they are saying Mr. Roy used 10% depreciation on vehicles, suggests the necessary rectification entries. So by reading this much, I understood, and you should also be able to understand that this problem is falling into third category, correction in the next accounting period. Why is that so, sir? Why is that? Because see the keywords properly in the first para. Unable to agree the trial balance last year, and then next year he appointed a chartered accountant who examined the old books and found the mistakes. Yeah, the mistakes are actually of the last year, but they were found out in the next year, that means in the current year, right? So with this you can understand it's falling into third category. Is that clear? Yes. And then one more thing that you have to understand, which is very essential, is that see here, unable to agree the trial balance. Mr. Roy, we assume that he is an owner. Okay, he's an owner. Fine. So he could not agree the trial balance. Whenever an accountant cannot agree the trial balance, when debit is not equal to credit, what does he do? He make use of the suspense account, right? Yeah, we fill the gap. If the gap is there on the debit side or credit side, whichever side it is, we fill that gap with the suspense account, and then we review the accounts and try to locate the errors and rectify them. Yeah, and clear the suspense account. But sometimes we cannot locate the errors within the small time frame. Yeah, and we are in urgent need of finalizing the accounts. So what we do is we just keep the suspense account as it is, okay, as it is, and we take the suspense account from the trial balance to the balance sheet. Yeah, if it has debit balance, it will be asset. If it has credit balance, it will be liability. Yeah, it will be shown like that. That's what we do. That's a normal procedure. But now what Mr. Roy has done, unable to agree the trial balance last year and wrote off the difference to the profit and loss account of that year. He did not use suspense account at all. He was supposed to make use of the suspense account, but he did not do that. He just wrote off the difference to profit and loss account. So what happened because of that? Of course, profit and loss account will be affected. And what will happen? Profit and loss account will be affected, and then later capital account will also be affected, because profit, where does it go? Who has right on the profit? Capital account. So in the last year, what happened? The difference went to profit and loss, and then profit and loss effect went to where? The current, the previous year net profit, and then the effect went into capital account. Is that clear? Yes. Now when you will rectify one-sided errors in this year, in the current year, yeah, or you can say next year, when you will rectify one-sided errors, and when you will use suspense account to rectify them, then what you will do at last suspense account balance will not be kept as it is. No, it will be transferred to capital account. Okay, we'll see that at last, but it's an important caution that I wanted to give you right here itself, so that you will not be confused later on. Okay, don't worry, it's simple. Okay, and then we have so many errors over here, so let's just start solving this question. Okay, let's start. Now see the first error over here. Purchase of a scooter was debited to conveyance account 3000. How are we going to rectify this error? Very simple. We just have to look for the keyword. The keyword is debited. So it's falling into that category. Which category? Posted, debited, credited. You all know. Mistake is there only in specific account. Okay, so how to go about this? Just read the error in two parts. The universal tape. Read the error in two parts. The correct part and the wrong part. What is the correct part over here? Purchase of a scooter. What is the journal entry for that? Simple. Scooter account debit to cash account. Isn't it? Purchase of a scooter. Scooter account debit to cash account. That's the correct entry. Motor vehicle account debit. Okay, fine. Motor vehicle account to cash account. Or you can also take scooter account. It doesn't matter. Fine. Is that clear? Yes. Now you have to pass the wrong entry for this transaction. What's the wrong entry? See the wrong part properly. Was debited to conveyance account. I've told you whenever these terms come, debited, credited, posted, then the mistake is there only in what they are talking about. They are talking about conveyance account, so mistake is there only in conveyance account. Conveyance account has been debited. Okay, so conveyance account debit. Cash account is completely right because they are not saying anything about cash. So to cash account, this is the wrong entry. So what you have to do, how will you pass the rectification entry? It's very simple, sir. We just compare these two entries. What we do is, whatever that is wrong, we reverse that. Conveyance account is wrong and it has been debited, so we reverse that by crediting it. Yeah, we reverse that by crediting it. And then whatever is, not recorded, we will record that. What is not recorded? Motor vehicle was supposed to be recorded and it is not recorded, so we will record that. How will you record? See here, in the correct entry it was supposed to be debited. To record, you will debit it. Motor vehicle account 3000 debit. Is that clear? Fine. And what's the third part? The third part is understand, you will not touch whatever that has gone right. What is gone right? Cash account has gone right. Yeah, so you will not touch the cash account, leave the cash account. There is no mistake in cash account. Whenever you have these terms, debited, posted, credited, these three things you have to understand properly. Yeah, you have to make sure and follow this approach. What is that? Reverse what is wrong, record what is not recorded, and then whatever that has gone right, do not touch that. Cash account is right, do not touch that. It has been completely accounted for properly in the wrong entry also, so you will not touch that in the rectification entry. This is the rectification entry. This is the rectification entry in case of the error happened in the current year and rectified in the current year. But this error is of previous year. So what does that mean? You have to follow the exception. You have to follow the exception. Cannot debit or credit expense or income account. So see properly. Do you have any expense or income accounts over here? Motor vehicle is an asset. It is not income, neither expense. Conveyance account is what? This is an expense account. This is an expense account. Yeah. So what you will do? You will just replace conveyance with profit and loss adjustment account. See here. Motor vehicle account debit, the same thing. I mean, rectification entry in the next year. Motor vehicle account debit to profit and loss adjustment account 3000. Is it clear? I have just replaced the conveyance with profit and loss adjustment account. This is the entry. Now if you practice a lot, then believe me, you will not be, can directly do these things in your mind only, and so fast if you just practice a lot. Yeah, in exam you don't need to do this directly. You can pass these entries because this is the actual answer. Okay, motor vehicle account to profit and loss adjustment account 3000. Did you understand this? Easy. Now what happened? See, this is a non-current asset, motor vehicle, isn't it? And on non-current asset, what do? We charge depreciation. And in the last year, this error happened now. We purchased a scooter and it was debited to conveyance account. It was treated as an expense. So there was no depreciation charge in last year. So what we have to do? That's also an error now, error of omission. Depreciation is not recorded at all of the last year. Yeah, and the motor vehicle is also now supposed to be decreased, isn't it? Because see here, 10% depreciation is there on vehicles, the company policy. Yes. So what we have to do? We have to charge the depreciation now. So how will you charge the depreciation now? It's really simple. What would be the rectification entry for depreciation? You all know. See here, directly you can pass the rectification entry. You don't need correct entry, wrong entry and all that. What is the depreciation entry? Depreciation account debit to motor vehicle account, yeah, to asset account. That's what the depreciation journal entry is, isn't it? So see the journal entry, depreciation account debit to motor vehicle account. You have decreased the motor vehicle by 300. That's the entry, depreciation to motor vehicle. But rectification in next year, you cannot debit or credit the expense account. Depreciation is an expense, non-cash expenditure, it's an expense. So you cannot debit depreciation. So what you will debit? Profit and loss adjustment account. Is that clear? Profit and loss adjustment account 300 to motor vehicle account 300. This is the depreciation charged. Is that clear? Now if you will see the ICAI study module, then you will find they have just passed one entry. They have just passed one entry, motor vehicle account to P&L adjustment account 2700. That's also fine. That's also fine because they have taken net. Yeah, 3000 minus 300, that's 2700. That's also fine. But this is an expanded form and it's easy to understand this way. Okay, for you, I'm saying for you, not the examiner. In exam directly you can do that. Motor vehicle account to P&L adjustment 2700. Is that clear? Yeah. So that's the solution of the first part. I mean the first error. You got this, right? Now let's understand the second one. Now see the second error, purchase account was overcast by 10,000. Very simple. Purchase account overcast means what you have to do? You just have to reduce it. It is recorded more than what it's supposed to be. Just reverse it. See here. How will you reverse? Purchase account has debit balance. To decrease the purchase account, what you will do? You will credit the purchase account. Yeah, that's all. That's a casting error now. So just credit the purchase account. And then what will happen? You will have a handicap entry. To complete the handicap, you need suspense account. So you have to debit the suspense account. 10,000. Easy? Yes. But in the next year, you cannot debit or credit the purchase account. You all know exception. So what you will do? Just replace that with the P&L adjustment account. Okay. So you have the entry suspense account debit to P&L adjustment account. Easy? Yes. This was an overcasting error. Yeah. Overcasting means what? It is recorded more than what it's supposed to be in that account, in that only specific account. So just, reduce that account. Yeah. Overcast means it's more than what it's supposed to be. Just reduce it. Fine. Third thing, a credit purchase of goods from Mr. P for 2,000 was entered as a sale. Now understand this properly. Yeah, here also we will be applying a trick. Yeah, what is the keyword over here? Read the entire thing properly again. A credit purchase of goods from Mr. P for 2,000 was entered as a sale. The keyword is entered. Whenever we have the keyword such as recorded, entered, passed, that means entire transaction is wrongly recorded. The mistake is there in the journal. In the initial recording only there is a mistake. You all know we have two tricks over here, homogeneous and heterogeneous. Now you have to identify which is this. See here, a credit purchase. Purchase means debit. You have to read the error in two parts, the correct part and the wrong part. Credit purchase. Purchase means debit balance. Okay, debit balance from Mr. P was entered as a sale. Yeah, purchase, credit purchase transaction, purchase book transaction was recorded in the sale book. That's what they are saying. Sale has credit balance, isn't it? Sale account has credit balance. So debit has gone into credit. This is a heterogeneous error. So to rectify the heterogeneous error, we have three steps. Yeah, we have three steps. What is that? Record what is right, reverse what is wrong, and then give the effect in the party account with the added amount. Yeah, you all know the logic and everything. I cannot explain the logic over here. You just have to go back and watch the second video. Okay, so that's what we'll do. See here, the amount is of 2,000, right? So what is right? Purchase is right. What is wrong? Sale is wrong. Yeah, and the party is Mr. P, isn't it? Our, he's our supplier. Fine, that doesn't matter. So it's really simple. The third transaction, we will use the heterogeneous trick. What we'll do? Record what is right. Purchase was right, so just debit and record that. You all know purchase has debit balance. To record that, I will debit that. Okay, and sale has credit balance. It was wrong. So to reverse the sale, what we do? We debit that, opposite. Okay, and then what we'll do? Two things are debited. Yeah, entry cannot be handicap. You all know. And then you have to give the effect in the parties account. That means you have to credit the Mr. P account with the added amount 4,000. The logic behind this added amount and everything I have given in the second video. Yeah, I cannot explain over here and just stretch the video. So purchase account debit, sale account debit to Mr. P account 4,000. Is it clear? Yes, simple. Now this is rectification in the current year. but here we are solving rectification entry in the next year. So in the next year, what would be the entry? Simple. Purchase and sale are what? Expense and income. You cannot take these names. You cannot debit or credit them. So what you have to do? Use P&L adjustment. Yeah. Together only you can take P&L adjustment account 4,000. Yeah. 2,000 plus 2,000, 4,000. To Mr. P account 4,000. You get this, right? It's really easy. It's not difficult. Okay. This was heterogeneous transaction. Debit has gone into credit. Yeah. In this situation, we say this is heterogeneous transaction. Record what is right. Yeah. It was a purchase transaction. See, a credit purchase. That's the correct thing. The wrong thing was the sale. Yeah. So record what is right, reverse what is wrong, give the effect in the party account with the added amount. Clear? Easy. Next transaction 4. See here. Receipt of cash from Mr. A was posted to the account of Mr. B 1,000. Now what's the keyword over here? Posted. It's falling into that credited, posted, debited category. So mistake is there only in specific account. Universal tip, read the error in 2 parts. Receipt of cash from Mr. A. This is the correct part. Receipt of cash from Mr. A. What's the correct entry for that? Really simple. Cash account to Mr. A. Cash account to Mr. A. Do you agree? Yes. Cash is received from Mr. A. Simple. But now what did they do? What's the wrong part? Was posted to the account of Mr. B 1,000. Yeah. So the wrong entry is that there is mistake only in Mr. B account. The cash account is completely right. Okay, because mistakes are always specific in this category. In this category, mistakes are always specific. Whatever they are saying in the wrong part of the error, yeah, only in that there is a mistake. Okay, only in that. Rest everything we assume it's right. That's our technique. Fine. So the wrong entry is cash account to Mr. B. Cash account to Mr. B. Fine. And then what's the rectification entry? Really simple. Just compare these two things. Yeah. Record what is not recorded. What is not recorded? Mr. A is not recorded. Just record that to Mr. A. Mr. A was supposed to be credited. Just record that. Okay. Reverse what is wrong. What is wrong? Mr. B is wrong, isn't it? The correct part was, see, a receipt of cash from Mr. A was posted to Mr. B. So Mr. B is entirely wrong now. Just reverse his account. In the wrong entry, he was credited. To reverse, you have to make an equal debit, equal opposite, yeah, equal debit. So Mr. B, debit. And whatever that has gone right, do not touch that. You will not touch the cash account. Cash account is completely right. Just leave it. Okay. So Mr. B to Mr. A. Now, this is the rectification entry in the current year. Is there any changes in the rectification entry the next year for this? No changes. Why? Because here you do not have any expense, neither any income. You don't need to replace anything. It's the same entry. Is that clear? Easy. So I have done this to give you a proper understanding. Yeah, why I have made these 2 columns over here? Just to show you that we'll be only replacing the expense and income accounts with profit and loss adjustment. Okay. Rest everything, liabilities, asset, capital, those things will be same only. Yeah, there will not be any change in that. Clear? Easy. Next, we have 5th transaction. Receipt of cash from Mr. C, that's the correct part, was posted. Posted means that category only, specific mistake, to the debit of his account 500. Yeah. Now understand what has happened over here. This is very interesting error. Receipt of cash from Mr. C. What's the correct entry for this? The correct entry is, see here, simple, cash account to C, isn't it? Cash account debit to Mr. C 500. But now what did they do? What did they do? What is the error? The error is was posted to the debit of his account. What was supposed to happen? Credit of his account, not debit. Credit of his account. Here they are saying debit of his account. So what does that mean? See here, the journal entry effect would be like this. Cash account debit 500, Mr. C account debit 500. It's completely messed up. It was supposed to be cash account to Mr. C. They have done cash account debit 500, Mr. C account debit 500. So how will you rectify this? How will you rectify this? Really simple. The mistake is there only in Mr. C account. Yeah. Cash is completely right and nothing wrong has been recorded. Yeah. It's just that Mr. C has been recorded on the debit. Yeah. It has been debited. He has been debited. So to remove that debit and give the effect in credit, what you have to do? You have to credit the Mr. C account by the twice amount. Yeah. With the added amount. Yeah. See here. First you have to reverse this. Mr. C 500. You have to reverse this. It is debited now over here. It is debited. To reverse this, you need a credit of 500, and then give the effect and credit. You need again one more time 500. So in total you need 1000. Okay, to Mr. C 1000. It will be rectified, but then it will be a handicap entry because there is no debit now in rectification. So you will make use of the suspense account to Mr. C. Clear? Easy. Now the logic of this, the double amount correctly and properly, just watch the 5th video. I have explained that properly over there. Okay, with the illustration and everything properly, with the ledger illustration, how it will work. It's really simple. See, if this is Mr. C account, the amount was supposed to go where? On the credit, but the amount has gone on the debit. Yeah, on the debit. So what do you have to do? First, you have to bring the Mr. C to neutral. To bring the neutral, to remove the debit, you have to make an equal credit of 500. It will become neutral. And then to bring it to credit, you have to make, credit again of 500. Then it will come on the credit side. Yeah, so that is why twice amount, double amount. Okay, added amount. Is that clear? Yes. And then rectification in the next entry, in the next year, it's same only. Rectification in the next year, same only. Yeah, because here there are no expense or income, so same entry. Clear? Easy. Next we have, see here, 6th transaction, 500 due by Mr. Q was omitted to be taken to the trial balance. 500 due by Mr. Q was omitted to be taken to trial balance. Now here partial omission has happened. Understand properly. Whenever they say omitted and all, it's like they are falling into that credited posted category only. If they are saying fully omitted with the transaction, then that's not like that. There is no specific mistake, entirely omitted. But here they are saying they are talking about Mr. Q. They are not telling you the entire transaction. They are just saying that 500 due by Mr. Q was omitted. So Mr. Q account was omitted to be taken to the trial balance. You were preparing the trial balance. You did not take Mr. Q. You did not take the Mr. Q. Who is Mr. Q to you? Read the transaction again. Read the error again. 500 due by Mr. Q. By Mr. Q means we have to receive money from Mr. Q. Maybe let's just assume that in this example, let's just assume that we have sold goods to Mr. Q. Okay, and Mr. Q is supposed to pay us. Okay, have this notion in your mind. It will be easy to rectify this error. Mr. Q is your debtor, is our debtor. Okay, we have to receive money from Mr. Q. He is our asset. Okay, fine. So Mr. Q account is not recorded. That only specific account is not recorded. That thinking you have to have. Okay, so what's the correct part? 500 due by Mr. Q. Yeah, this is the correct part. Let's just say we had made sales to him, right? So see the correct entry. Mr. Q account to sales. This is the correct entry. Mr. Q account to sales. Wrong entry. What happened in the wrong entry? What is the effect? In the trial balance, Mr. Q was not taken at all. Mr. Q 500 was not taken at all. That means the effect is that sales was recorded, but Mr. Q was not recorded. Mr. Q was not debited. It's partially omitted. So what you will do? What is the rectification entry? Simple common sense. Simple common sense. Q is not recorded at all. Just Q is not recorded. Record Q. Q is an asset. He is our debtor. To record, I will debit him. Mr. Q account 500. Is that clear? You have to understand that this is a little bit confusing. This is a little bit confusing because you will wonder why have I taken sales over here. That's because I just wanted to make an assumption to give you a logical understanding. Yeah, because they are saying now 500 due by Mr. Q. Yeah, so how come Mr. Q is supposed to pay to me? Because of sales, let's just say. Yeah, so that's the entry I passed over here, the correct entry. Mr. Q account to sales. Fine. But what did actually happen? What's the wrong part? The wrong part is Mr. Q was omitted to be taken to the trial balance. Mr. Q was omitted. Omitted means in the journal entry, how can we see that effect? In journal entry, we can see that effect by like this. See here. No debit to sales. No debit to sales. Mr. Q was not debited. Yeah, Mr. Q was not debited. So what you will do in rectification, just debit the Mr. Q. That's all. Yeah, Mr. Q account debit. Now if you debit, it will be handicap entry because there is no other mistake over there. There is no other mistake. So you have to make use of the suspense account. Clear? And then in the next year also the same rectification entry because you don't have any, expense or income over here. Is that clear? So Mr. Q account debit to suspense account. You can also say Mr. Trade receivables account, debtors account, that also you can take. Now if you will see in the module, I think they have taken trade receivables. Okay, that's also fine. Same thing. Okay, clear. Now the seventh transaction, see here, sale of goods to Mr. R for 2000 was omitted to be recorded. Sale of goods to Mr. R for 2000 was omitted to be recorded. Now understand this. In the seventh transaction, they have given you full omission. In sixth transaction, they gave you partial omission. They were just talking about Mr. Q was omitted. Yeah, but here in the seventh, what they are saying, sale of goods to Mr. R, the entire thing has been said, and they are saying was omitted to be recorded. That means entirely this is not recorded. It is case of full omission, full omission. So what you will do? What's the rectification? Really simple, sir. Just record that. Just record that. Okay. So see, it's really easy. Seventh one. Okay. Seventh one. Rectification entry. What's the rectification entry? Really simple. Let's not focus on the rectification entry first. See the correct entry and then we'll see. Correct entry, see here. Mr. R account debit to sales account. Correct entry. Yeah. What happened? What was the wrong part? Wrong part was full omission. Nothing was recorded. Was omitted to be recorded. I told you now, entire thing has been said. Sale of goods to Mr. R was omitted. Entire thing is not recorded. Entire transaction is not recorded. Here in the sixth, just that account was omitted. Just that account, Mr. Q. They were just saying Mr. Q was omitted to be taken to trial balance. To be taken to trial balance also they have said. So this is the case of partial omission. But in the seventh, this is full omission. So everything has not been recorded. Nothing has been recorded. Okay. So no entry. The effect is nothing. No entry. So what we have to do? Simply record. Same entry. Record. Just record. Mr. R account debit to sales account. 2000. Okay. Now rectification in the next year. What will happen? You cannot take sales because it's an income account. You have to replace it with P&L adjustment account. Clear? Easy and straightforward. And then we have eighth, last transaction, is it? Yes, last transaction. So what's happening over here? What's happening? Amount of 2,395 of purchase was wrongly posted as 2,593. Okay. So what you have to do? See the keyword posted. It's falling into which category? Credited, posted, debited, that category. Mistake is there only in specific account. Yeah. What they are saying, amount of 2395 of purchase. So mistake is there in purchase account, only in purchase account. Okay. Is that clear? Yes. So read the error in two parts properly. The correct part. This is the correct part. Amount of 2395 of purchase. Okay. Purchase happened of how much? 2395. This is the correct part. What is the wrong part? Wrongly posted as 2593. This is the wrong amount. This is the wrong part. Easy? Yes. So what you have to do now? What you have to do? You just have to see whether it's recorded more or less. 2395 and here it is 2593. Yeah. This is the correct amount. This is the wrong amount. So it has been recorded more. That's the mistake. Recorded more. So you have to reverse the purchase account. You have to reverse the purchase account. See here. 8th transaction, right? Purchase account to cash. This is the correct entry. 2395. Yeah, the correct entry. Purchase account to cash. Purchase account to cash. Okay. Purchase account to cash. But the wrong entry was, see the wrong entry properly. What was the wrong entry? Wrong entry was 2593 amount was used only for purchase account. Only for purchase account, not for the cash. Because which category is this? This is posted, debited, credited category. Mistake is there only in specific account. Only in specific account. That is the purchase account. I've told you, whenever you have these keywords, you have to read the wrong part properly. In wrong part, whatever they are saying, whatever they are mentioning, mistake is there only in that. Rest everything is right. They are not saying anything about the cash book. Yeah, anything about the cash account. Nothing has been said. So you will assume cash is right. See here, cash is right. 2395. It is right. Mistake is there only in purchase. Is it clear? Did you understand? Yes, we got it. So purchase account to cash. This is the wrong entry. So how will you rectify? Purchase account is more than what it's supposed to be. Simple. Just reverse that by the differential amount. Here you have 2395. Here you have 2593. The difference, it is more by how much? By 198. So just reduce the purchase account by crediting it, because you all know purchase account has debit balance. To reduce, you have to make an credit, make a credit. to purchase account 198. And then what will happen? The entry will be handicap. So to complete the entry, you will have to use the suspense account 198. Whenever the entry becomes handicap now, whenever entry becomes handicap, just make use of the suspense account. Is that clear? So suspense account, to purchase account. Now rectification entry in the next year, of course, just replace the purchase with the P&L adjustment account. Clear? Easy. Now what you have to do? Now it's really simple. See here. In these entries, what you have done, you have used a dummy account which you opened, that is P&L adjustment account. So there is a balance in P&L adjustment, right? There is a balance in P&L adjustment. See here P&L adjustment is getting credited, here debited, here credited, and then again here debited. Yeah, so there is a balance in P&L adjustment. Where does that balance goes? That balance we all know goes where? It goes to profit and loss account, main profit and loss account, and then to capital account. But for the question purpose, what do we do? This is the technical thing, I mean what will actually happen. But for the question purpose, solving purpose, what we do in the exam and everywhere, what we do? We take it directly to capital account. Yeah, so let's open profit and loss adjustment, T account, yeah, ledger account. So see here, profit and loss adjustment account, we also call it as what? Prior period items account. Okay, because what do we take in profit and loss adjustment account? What have we taken in profit and loss? How have we used profit and loss adjustment account? We have just used it in place of expenses and incomes. Yeah, isn't it? Yes. So that's what prior period items are, income or expenses which arise in the current period as a result of errors or omission in the preparation of the financial statements in one or more previous periods, right? So that's the thing. It's also called as prior period items account, and these all are what? Prior period items. Okay, fine. Now, so how it will work? Really easy. You just have to see the journal entries. See here, P&L adjustment account is getting credited over here, yeah, in this first entry. So go to P&L adjustment account, okay, it's getting credited because of whom? Because of motor vehicle account. Yeah, because of motor vehicle, isn't it? Yes. And in the second entry, P&L adjustment account is getting what? Debited because of motor vehicle 300. So just go to P&L adjustment, yeah, it is getting debited because of motor vehicle 300. Clear? Easy. And then what is happening? See, in the second entry, see here, P&L adjustment is getting credited because of suspense. Yeah, because of suspense. So P&L adjustment is getting credited because of suspense 10,000. This way you have to do this ledger account. Okay, and then see if in the third transaction, P&L adjustment account is getting debited because of Mr. P account. So the amount is 4,000. So Mr. P, right? Yeah. So P&L adjustment account is getting debited. Write the amount in the debit column because of Mr. P. Clear? Easy. And then next you have, see, where else? 4, 5, nothing. In 6, nothing. In 7, see here, Mr. R account to P&L adjustment account. So P&L adjustment account is getting credited because of Mr. R. So P&L adjustment account is getting credited because of Mr. R, 2000. Clear? Easy. Next you have, see here, in the 8th transaction, last transaction, P&L adjustment account is getting credited because of suspense. P&L adjustment account is getting credited because of suspense 198. Okay, you got this? Easy. Now once you have done this much, then what you have to do? You have to take out the balance. Okay, so add, this side is bigger, yeah, credit side. So if you add up all of this, 10,000 plus 3, that's 13, 13 plus 2, that is 15, plus 198, 15,198. Yeah, write that on the both the sides, 15,198 minus 300 minus 400, the balancing figure is 10,898. What will happen to this? This will go to the capital account, Roy's capital account, because Roy is the owner in this question. Roy's capital account, this is the balancing figure. And the journal entry, just pass the journal entry for this. Yeah, P&L adjustment account 10,898 to Roy's capital account. Yeah, P&L adjustment account 10,898 to Roy's capital account 10,898. Is that clear? Now sometime if you get a small problem of 5 marks, then you will not have time to prepare this profit and loss adjustment, and it's not required also. So what you will have to do then, you will not do this, you will directly see the entries properly. Okay, you will directly see the entries properly. Use the calculator and just add up. See, like this you will do. P&L adjustment credit is there, 300. Okay, credit, and then debit. Yeah, so you will add up all the debits and credit in the calculator, and then you will see which kind of balance it has. In the calculator only you will do, and then you will close the P&L adjustment. You have to close over here. If it has debit balance, then you will credit it over here and close. Now here what happened? See here, P&L adjustment had which balance over here? Which balance? Here it has credit balance because credit is more na. So here it has credit balance. So P&L adjustment account got debited over here, as you can see. Yeah, P&L adjustment account debited over here 10,898. So you have to just do it in calculator also, and you can see that. And then you will credit the ROI's capital. But if, for example, P&L adjustment had debit balance, let's just say debit was more, and this came over here, then that means it had debit balance. Then here P&L adjustment would have been credited. Is that clear? Because what will happen of P&L adjustment? It has to closed off, and it has to move to the balance, has to move to the capital account. Is that clear? So this entry you will pass, and then you have to open the suspense account. I mean, this entry you have to pass. Whatever balance is there in suspense account, that also has to be shown. Or now in this case, I told you that the difference is written off to the profit and loss account, which affected the capital account. So now here suspense account closing balance will hit capital account. Okay, let me just show you. It's very simple. It's not difficult. See, suspense account. How you will do this? Easy, simple. Just see the journal entries and do the cross postings. Just take it from the journal entries and cross postings. So suspense account, see here, suspense account is getting debited because of P&L adjustment. Go to the suspense account, ledger account. Suspense account is getting debited. Write the amount in the debit column, 10,000, because of profit and loss adjustment account. And then see, next we have again suspense over here in the fifth transaction. Suspense account is getting debited because of Mr. C, 1,000. Suspense account is getting where is it? Suspense account is getting debited because of Mr. C. Write the amount 1,000, Mr. C. Next we have see, in the sixth transaction, suspense account is getting credited because of Mr. Q. So suspense account is getting credited. Write the amount in the credit column, 500, because of Mr. Q. Trade receivable. Now in the module they have just taken trade receivable over here. Don't worry, you can take debtors also, Mr. Q also, trade receivable also. It's all same. Fine. And then next you have one more, the last entry. See, suspense account debit to profit and loss adjustment. Suspense account is getting debited because of profit and loss adjustment. Suspense account is getting debited 198. Write the amount because of profit and loss adjustment. Clear? Easy. Now balance it out. How will you balance? See which side is the bigger. 10,000 plus 1,000, 11,000 plus 198, 11,198. 11,198. Write that on the both the sides. Okay, and then just deduct it with this 11,198 minus 500, that's equal to 10,698. This is the balance which will go where? Normally what we do with the suspense account, understand properly, you have to get everything logically, otherwise it's useless. Believe me, it's useless. Suspense account balance, what happens to that? We keep that as it is over here because this is the new year now. This is the current year and we are rectifying the previous year's errors. Sometimes the suspense account will have opening balance, and then what you will do, if it had opening balance, to balance B by D, or by balance C by D, then you will keep the suspense account as it is. I mean by balance C by D, like that. You will close it. But now here what happened, in the previous year there was no suspense account. There was no suspense account in the previous year. In this previous year, what did Mr. Roy do? Mr. Roy, he doesn't know any accounting or anything. He just took the difference to profit and loss account. So that is why in the previous year what happened? Profit affected and then capital account was also affected. So now in the current year, to rectify those errors, and we have cleared the suspense account, sometime we will clear, sometime we will not clear. So the balance, whatever that is left in the suspense account, what we have to do, we have to take it to the capital account only, because last year it was taken to capital account, the impact. This year also the rectification of that, and then the balance has to hit the capital account only by ROI's capital account, 10,698. Is that clear? But normal procedure is what? Normal procedure. Understand the normal procedure. Normal procedure is, I would have taken over here by balance C by D 10,698. That's the normal procedure. And in the study module also, I think practical question number 2 and 4, I think there you will see suspense account, they are taking closing balance, buy balance C by D, or it can come over here also to balance C by D. Is that clear? This is just a special case only in this question because of that transfer, because of this transfer, because of this, see, wrote of the difference to the profit and loss account. Only because of this in suspense account we are transferring the balance to Roy's capital. Otherwise we don't do this. But here it's always like this. In profit and loss adjustment account, it's always like this. Always this has to hit where? Always profit and loss adjustment account will close in Roy's capital, I mean in capital account. But with the suspense, it's not like this. The suspense, it's not like this. Yeah, we'll leave the closing balance. Fine. See here, normally suspense account balance is not transferred to capital account, but here in this question it is said that in the last year difference of the trial balance was written off in profit and loss account, which means it ultimately affected the capital. So we have to give the suspense account effect to the capital account only in the current year also. And we can't leave it as buy balance C by D or to balance B by D. Otherwise we would have done, we would have taken over here buy balance C by D. Is that clear? So this is the thing. Okay, so you understood, right, how easy it is. It's not difficult. You just have to watch the previous videos, understand each and everything, and have command on this topic, and then just solve the problems on these. Yeah, you will be easily able to do that. It's not difficult. It's the same thing I'm doing. There is no difference at all. It's the same thing. It's just that replacement of expense and income account with the P&L adjustment, and this logic you have to understand properly. Yeah, how you have to do this P&L adjustment. To prepare the ledger account is very simple, but sometimes if you don't have the time, the problem is of 5 marks, then what you have to do, you just have to make use of the calculator and see the debits and credits, and see which balance P&L adjustment account has, whether it has debit balance or credit balance. Now you wonder how will we come to know that in the calculator. It's really simple. If debits are more, then that means there is a debit balance. If credits are more, then that means it's a credit balance. Simple. See here, credit is more na in this, credits are more na, so that means this is credit balance. This is credit balance. Don't think that it is shown on the debit side, it means debit balance. That's completely messed up. It's not like that. It's not like that, because in the next period what happens in other account I'm talking about, not in this, this goes over here, buy balance B by D, isn't it? Credit balance. If credit is more, it's credit balance. If debit is more, it's debit balance. It's like that. Okay, you got it? Yes. So that's it for this video. I think you have got this. If you have any doubts in this, just message me in Instagram and ask. I will reply. Okay, I will try my best to reply. I get lots of messages. I'll try my best. Okay, so that's it for this video. I think you have got this. It's really simple. It's not difficult. Okay, take the screenshot if you want. Okay, bye.